Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla, let's go over the market, let's figure out what is happening today with Tesla. The delivery numbers and production numbers, of course, did come out today, which is great to see. And yeah, let's just go over all of that information as per usual. So if you enjoyed the video, don't forget to hit that like button. This is not financial advice and I am not a financial advisor. And of course, if you enjoyed the video, don't forget to hit that like button, all that stuff. And my membership section is linked down below in the description for $3 a month. You get access to my intraday thoughts, updates, etc. on Tesla as it's moving throughout the day. So if you're interested in that, the link is down below. But this is the first video of 2024. So I'm excited. Let's get this party started. Tesla on the day down, unfortunately, but down pretty much non-existently. 0.03%, pretty much flat on the day, which thankfully, compared to the market, is pretty darn good considering the market, for instance, QQQ is down about 1.7% on the day, and pretty much everything else looks a bit easier to see here, but you can see pretty much everything else is down substantially. Any really tech-related stock is down quite significantly, right? Even like Rivian is down 10%. They missed on their delivery numbers, right? Lucid is down a little bit. Intel, Apple's down like 3.5%, almost 4%. Facebook's down 2%, right? Shopify's 5%, Microsoft 1.5%, right? Et cetera, et cetera. AMD and NVIDIA both down like 3-6% respectively. That's a, sorry, AMD's down 6%. Anyway, you get the idea. Very tough market for tech specifically, actually. But Tesla holding pretty strong relative to the market, which is great to see. Now, of course, the delivery numbers did come out. Tesla did beat expectations. It wasn't a substantial beat, but it was an absolute beat nonetheless, which is great to see, which is probably why Tesla is holding its own. But as we all know, Tesla feels like its own index. It likes to do its own thing. So let's figure out what is happening and what we can expect moving forward. So there's good news and bad news here, right? So there is, of course, good news and there's, of course, bad news. So first and foremost, I want to point out very quickly before we really jump into it on the 2-minute chart, some pretty decent volume buying pressure coming in towards the end of the day on Tesla. So that's pretty interesting to see. A nice little spike towards the last like 10 minutes or so of the day, which is always nice to see. But with that being said, let's go on the daily chart first. I'm going to move the stochastic for now as we start the daily chart. So let's start off with the bad news. The bad news is, and there is absolutely some bad news. Some bad news is pretty simple. I mean, first and foremost, we obviously fell out of this ascending wedge, right? That's not ideal. We did fall out, right? On pretty much not yesterday's candle, but Friday's candle, which isn't great. That's not the most ideal thing that you want to be seeing in the entire world, right? Falling out of this wedge. But like I said many times, you know, these wedges more often than not, of course, fall to the downside. I've been saying that for a while. Not always. There was obviously a chance that we break to the upside, for instance, on this candle before it pretty much went straight south. But more often than not, they usually go to the downside. And that's exactly what happened, unfortunately. But, you know, it is what it is. It's just a probability game, right? So we did fall out. And then, of course, we continued downwards a little bit more. But we pretty much bought up the majority of the selling pressure that Tesla had throughout today. Because Tesla was at one point from yesterday's close to the lowest point of the day down only about 1.5%. Not even that crazy of a day, again, compared to the market. So, you know, probably the deliveries helped with that, which is always a good to see, which, of course, as you can see here, Tesla did beat on those numbers, which is obviously great. Now, that's bad, right? The fact that we broke out. Obviously, this is a pretty decently large wedge. I wouldn't say it's the largest wedge in the entire world or anything like that I've ever seen, but, you know, it's a respectably kind of, you know, decently sized wedge, right? It's not small, but it's not like giga huge either, but it's enough to warrant the fact that this move to the downside, even though I think we'll get a bounce first, I think at least, I'd be surprised if this is all we get. Like, I'd be pretty surprised if this is all the pain that happens from Tesla, because again, when you fall out of this kind of wedge, like I expect more of a move to the downside. For instance, one thing you can take a look at is, well, you can just take a Fibonacci, right? Go from the swing low from pretty much the bottom of the wedge to, well, the top of the wedge, right? Which is pretty much all the way over here. And you can kind of determine roughly where we can go, right? The first level that I'd personally be expecting is, you can see this 0.382 level, which if we bounce off of that level, which is pretty much lined up almost exactly to my rough 240-ish level I've been talking about for a while, but also lines up pretty well with the retest of this bull flag, right? That makes a lot of sense. And that would be a pretty also bullish level to bounce off of, showing that there is still a lot of strength in Tesla, that this little correction that we're getting right here, right now, potentially even a little bit further, is nothing more than just a little bit of a correction, right? We're kind of cooling off a little bit and essentially preparing the steam and, you know, the momentum, if you will, recapturing the momentum for the next move up, as we're essentially initiating new buyers now that the price has fallen, right? That's usually how it works. Stocks rise, sellers rise, they sell, pushes pressure on the stock to the downside. And as the stock, you know, goes down enough to a certain percentage, to a certain level, buyers step in, and that essentially begins a new round of buyers, and then you kind of rinse and repeat. Anyway, you get the idea, right? It's essentially just supply and demand, really. But, you know, this level will be pretty good levels. And this is the level I would personally hope that we do bounce off of, right? If we go much lower than this, that's where this bullish thesis, in my opinion, really starts to fall apart, because at that point we'll start to re-enter once again this bull flag, which isn't what I want to be seeing. I don't want to be re-entering this bull flag. So that's kind of the bad news there with this, little rising wedge that we're in, that we are falling out. I personally expect a little bit more pain, probably after a bit of a bounce, which I'll talk about soon. But all in all, that's kind of the idea I'm expecting right now. I did buy the dip a little bit today, but I'm saving more to buy if we do come down to about 240. On top of that, we did also cross the MACD to the bearish side, which isn't ideal. Now, I like the MACD, don't get me wrong, it's a great tool, but I think people put a bit too much emphasis on it. Let's look at an example. So you can take a look, like for instance, right here. When we were trading right over here, right, you can see we had a massive red candle, MACD, also flipped bullish, pretty much exactly on this really large red candle. What happened next? Yeah, we dropped a little bit more, but it wasn't that much more, right? Like, take a look at this. From here, from this MACD on this massive red candle, and of course the MACD turning pretty much bearish, we ended up dropping another 4.5%, which isn't that crazy, especially for Tesla, right? And then from there, we just had a beautiful rocket up right after that. So the MACD was still bearish this whole time, even though the stock literally went decently higher too. Like, I would even argue substantially higher, right? About 10% higher than from the point that the MACD flipped bearish. So take that into consideration. And then, as we end up getting to the top of this, I mean, obviously in hindsight, to the top of this rally, the MACD started flipping bullish. And what happened? Well, we ended up crashing. So that's why sometimes, it's not great that it flipped bearish. Obviously, it's, one checkbox for the bears, essentially, out of potentially many, but just, people put too much pressure or too much weight on the MACD, in my opinion, of course, because I just showed you an example of where it pretty much said one thing and the stock did the complete opposite. So sometimes you always want to, take that with a grain of salt. Just my opinion, of course, but that's something to consider. So, but it did flip bearish. So just, that is something to still throw out there. That is still, like I said, a little check mark for the bears. But there's probably, many more needed. Now, that's the bearish aspect, right? The bullish aspect, or I guess the good news that I told my members just now, is the fact that we are still holding above the 21 EMA. That's a nice little indicator to hold above. I do like that. That's a nice little bullish indicator to, maintain above. If we start closing below, that pretty much guarantees we'll come back down to like 240, maybe slightly enter the 230s as well, maybe shake out some more people. I still believe there's a shakeout needed. I don't think we're ready for the next move up just yet to break over such a massive resistance sitting all the way up about 265-ish, right? This big one over here. Feels like we need a bit of a shakeout, but we are of course also holding this trend line on the weekly chart, this little green line right here from all the way down here. Let me go ahead and reposition it slightly, but go ahead and reposition like this, something like this, give or take, something like this, right? Beautiful, right? We're roughly holding this little, trend line that we are set up on the weekly, right? Boom, boom, boom. So that's not a bad sign to see as well. So, that's the good news, right? We're holding above 21 EMA. We're holding that potential weekly trend line to the upside, which is great to see as well. Another thing that we're potentially setting up here is what could be a hammer candle. Now, hammer candles are one of my personal favorite candles, right? I love hammer candles. They're great. Obviously, they need follow through, right? You need more than just this candle to, you want to see follow through. You want to see tomorrow at the very least at the very least higher than today's close. But it's not the best looking hammer candle, but it's absolutely not the worst. And the reason I say that is as follows. The good part about this hammer candle, which again is a bullish reversal signal, potentially on the daily, or in this case, is the fact that the wick underneath the actual candle itself is a long wick, right? Pretty much the rule of thumb roughly is that you want this wick to be at least twice as long essentially as the actual candle itself. So if you were to take this candle right here, copy paste it and put it underneath, you want the wick to still be at the very least as long, if not longer than two of those, the thick part of the candles put pretty much one on top of each other. You know what I mean? Like if, again, take this, cut it out, put it below it, and it would still, you could probably do three of them. You know what I mean? Like this wick is probably 3 times longer than the candle itself. That's the good news. That's the most important part of a hammer candle, right? Even though if it's a red hammer candle, ideally green, but even though it's a red hammer candle, it's still not bad. Not as great as a green, but it's still, pretty good. The thing I'm personally not a huge fan of that makes me a little bit suspicious of this hammer candle, not as important as this wick, that's the more important thing that we have, which is good for the bulls, is the fact that the wick at the top is a little bit too long. I don't like it when there's a wick at the top because that still shows, especially with the red hammer candle, that still shows that there isn't that much confidence in this hammer candle. You know what I mean? Like in terms of just looking at this and trying to understand the price action that resulted as a result to form this candlestick, right? The buyers clearly stepped in, but they didn't step in enough to, number one, flip it to green and to really maintain it at least relatively closer to the highs of the day, right? That to me is like a very bullish hammer candle. So still good, still, in my opinion, better than not having this for the bulls, but just, in my opinion, take this hammer candle with a bit of, a grain of salt, if you will. So take that into consideration. And of course, the most important thing in my opinion, let's go back to the weekly, is we're still broken out of this bull flag. Like we're still bullish. Like I've said many times, even if we get a bit of a drawdown, we're still bullish. We have still flipped the bullish, or rather we still broke out of this bullish flag, which is great to see. That's beautiful. Again, retest can be scary, and this could be the week of the retest. Like I said, we still can potentially come down all the way down to about very high 230s to potentially about 240-ish. And it can look scary, and it may look dreadful even, right? And people might get shaken out. And I personally expect people to get shaken out. So that's kind of the point of these usually. But I'm personally just viewing it as nothing more than a retest, like I've said many times before, and that's the way I will continue to view it, right? Of course, we have the 100-day, I believe that's 21. We have the 21 EMA on the weekly still here to support us. The 100-day moving average, pretty much a 235, not too far below it. So I wouldn't be surprised if we come touch one of these two, and that's kind of the shakeout right there, right? That wouldn't shock me if it happens this week. On top of that, we still have the weekly MACD flipping bullish. We just had that little conversation about the MACD, but with it flipping bullish on something like a weekly time frame, that's one you can put a bit more weight into it, because the longer the time frame, like a weekly or especially a monthly MACD flip, that to me holds a lot more weight, because that usually it's more significant in meaning, because it's a lot harder for it to flip like this on a larger time frame. It usually has more weight behind it than something like the daily, which is still good, but especially something like, let's say, a 15-minute chart is constantly flipping left and right because it's such a short time frame. It's moving so volatile. But here on the weekly, because it's less volatile compared to like a 15-minute chart, every single indicator that's actually flipping bullish or bearish usually holds more meaning and weight behind that, if that makes any sense whatsoever. So take that into consideration. And of course, we have the monthly as well, potentially flipping bullish as well, ever so slightly, which is also great to see. On top of that, the 1 hour chart, I want to also take a quick look at this. We are setting up some bullish divergences, especially with the stochastic here. You can see with the R sign, the stochastic down here, so the R size here, the stochastics here, where essentially as we're pretty much making lower lows, arguably, honestly, right? We're pretty much making lower lows, if not pretty much going sideways. We're making nice, beautiful looking higher lows each time. So that's a good thing to see. That's a bullish divergence. And I personally expect an overall bounce. I really do. Now, the main question that I see is this. We're stuck in between two pretty important and pivotal moments, or situations, if you will, levels. We have a bounce that can be a potential just a retest, right? Don't forget, retests are important. So we broke down out of this ascending wedge. We can come back up to about 260, or close to 260. And that just is a retest. That's all it is. It'll just be a retest of this breakdown. And then potentially we continue down even further. Something like this, right? Something like this wouldn't shock me, right? But keep in mind. And then essentially what we're doing is we're doing a double retest. We come up here, retest, successful, boom, continue down. This breakdown has been successful. The bearish trend continues. We continue down. And that could be what brings us back down with the market correcting as well, right? Tesla, again, it's not that far away. Like Tesla's not that far away from this level, right? All we need to do is rally back up only like 4, maybe 5%. And we're pretty much right there at that retest of this breakdown. And that could be what, continues this bearish trend, because again, it is a retest of a bearish breakdown. And then what we do is come back down. We still haven't, in my eyes, we still haven't retested this overall bull flag on the daily or the weekly, whichever way you want to look at it. And then that brings us back down to this time frame as well. It retests that as well, which is, pretty much gives Tesla and the market time to correct, because the market looks like it wants to continue correcting, right? It's looking a little bit suspicious here, right? And that kind of lines up with the market correcting as well. So it kind of makes sense like that. That's the way I personally look at it. I expect a short-term bounce because we are oversold. The shorter time frames are telling me a bounce is on its way. But then I personally believe that we'll just get rejected at around 260, give or take. That'll be a confirmation of the breakdown, and we continue lower, come back, retest the bull flag, hopefully hold that as well, which again, 240, maybe, mid to high 230s. Bit of a shakeout in my opinion, and I think that'll hold, and I think we'll get a beautiful bounce from there. That's roughly the way I personally perceive it right now. So that's me. That's just how I look at it. Could be wrong. Who knows? Could be completely right. We'll see. Time will tell. But that's what I'm seeing right here, right now. But with all that being said, thanks for watching. And as usual, I'll see you tomorrow. Peace.